Well, hi everyone, and welcome to the Infinity Futures Daily Trading video. My name is Raleigh White, and I'm here to talk to you about the trades we took in our live trading room on Wednesday, November 12th, 2014. We're looking at today's economic calendar. You can see we had another relatively light day, but there were a couple of things we needed to be aware of. At 9 o'clock, we had wholesale inventory data being released, which came out in line with expectation at 0.3%. Then at 11 o'clock, we had FOMC member Lakota speaking, and then at 12 o'clock we had a 10-year note auction which had a high interest rate of 2.37 and a bid to cover ratio of 2.5, and this is versus last month where the high interest level was 2.38 and the bid to cover was also 2.5. As far as today's pre-market sentiment was concerned, things were somewhat negative coming into the open. Now, the Asian markets had closed mixed on commodity concerns, and the positive sentiment from Wall Street's gains was being offset by lower energy and metals pricing. We saw that the best performing market was the Japanese Nikkei. It was up 0.4 of a point at new 7-year highs after Prime Minister Abe has decided to delay a second sales tax hike that he felt would hurt the Japanese economy. The worst performing market in Asia was Australia. It was down a full percentage point on a slide in the retail sector, and the mining sector continued to dip on lower iron ore prices. As far as the European markets are concerned, they were open but trending lower on regulatory penalties. Now, the banking sector was leading shares lower over penalties for manipulating the Forex markets. The fines totaling nearly $1.7 billion are being targeted at Barclays, UBS, HSBC, JP Morgan Chase, and Citibank, among others. We also note that the United Kingdom retail sector is a bit under pressure after Sainsbury and Burberry both issued profit warnings. As far as the United States was concerned, Wall Street did also figure to open up lower ahead of corporate earnings. Now, the futures were pointing down coming into the open of today's trading session, following the global markets lower as penalties were pressuring the banking sector. Now, we did see on the corporate front that the last real surge of earnings results will be coming from Macy's, JCPenney, Cisco, and Beazer Homes, among others, and they're all scheduled to release their earnings today. Focus for many U.S. investors would be on the wholesale inventories coming out at 9 o'clock, FOMC member Lakota speak at 11, and on the release of the 10-year note auction results at 12 o'clock. Now, as far as our trading activities go, we only attempted 2 entries in the markets, and we were filled on one of these in what was a very sluggish trading environment in the markets. But before we look at this trade in any detail, I do need to remind us all of this following important disclaimer, and that is that trading futures involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources, as you may lose all or more of your initial investment. And always remember that past performance is not necessarily indicative of future results. Well, turning to the charts, let's begin here with the 30-year bond market. And we can see the 30-year bonds were chopping sideways coming into the open of today's trading session, and we saw 2 bars closing higher, followed by 1 bar retracing and a second bar retracing, and I had a long entry here at 141.13 just above the resistance to pivot point, and this bar opened up, never took a tick step in my direction, moved through what would have been my profit target, which was up here at 15, and once it moved through my profit target, then I ended up taking this trade out of the market as it moved against me. And I'm glad I did, because once I got the fill, the market moved short, and this would have knocked me out for about a $90 loss. The next market I'd like to take a look at is the E-mini S&P 500 market. Now, looking at this market, we can see towards the tail end of the trading session, we had 2 bars moving lower, followed by 1 bar retracing, a doji bar, which I don't count. Here's the second bar that was retracing, and I was sitting here with a short entry at 20.33 1/4, just below the upper Bollinger Band. This bar opened here, moved 1 tick in my direction, and then moved through what would have been my profit target at 20.32.25. And once it did this, I took the trade off, and I'm glad I did, because the market came back and would have filled me on the way towards my stop loss. That brings me to the crude oil market, and this is where we did see our one fill today. Right here at the open of the trading session, you can see we had 2 bars moving lower, so I'm looking for exactly 2 bars in one direction followed by 2 bars retracing, and this gave me a great entry at 77.34 right below the main pivot point. So I got my fill. The market moved about a tick in my direction and then a tick against me, and then 5 ticks in my direction. When it moved 5 ticks in my direction, my stop loss automatically moved to break even. The market reversed course and came back here, knocked me out at break even. Never really came to my profit target before moving away from me. So this was a scratch trade for me, and I'm glad I got out as a scratch because this could have cost me $100 per contract traded. So during the trading session, I had 3 attempts in the market, 1 fill in crude oil. It was a scratch trade, and my plan was to come back after lunch and look at the markets, in particularly crude oil, between 12:30 and 1:30, and I did see several opportunities that I want to share with you. This gray highlighted area here is the period from 12:30 to 1:30, and 1:30 is the close of the crude oil pits. So as this market was moving and chopping sideways, you can see we had this column of X's going up and then a column of O's retracing, and I felt that if this market came back up into this area here, we're going to call this a minor area of resistance, that this would be a good place to catch a quick little scalping trade to the short side. So I was sitting here with a short entry at 77.18, looking just to pick up 5 ticks on this trade and risking 10 ticks on it. So the market did in fact come up, fill me. It went about 3 ticks against me and then turned right around. When it moved to my profit target, my stop loss did move to break even, but it never came back to break even. It filled me and gave me 5 ticks, or $50 per contract traded. Now, staying with the crude oil market, you can see that back here prior to the open of this period of time here over lunch, we had a level that was established here at 77.34. And I sort of felt like if prices were going to come up here, this would be a great place to short the market or fade the market. So I had a short order in the market at 77.34. And I had a profit target down here at 77.29. So the market came all the way up here, filled me, and then burst through this and came within 1 tick of knocking me out. My stop loss was at 77.44. It's a 10-tick stop loss. It came 9 ticks in my direction. When it did that, what I decided to do was to go ahead and move my profit target to break even. So as the market came back around here, I could get out with a scratch trade, and I consider this a good rescue, in particular since I came within 1 tick of getting knocked out. And I'm glad I did that, because you can see the market chopped around and ultimately would have knocked me out for a 10-tick loss. But as it was, I saved the trade with a scratch. Now, staying with the crude oil market, we could see here that we had a column of O's going down and X's coming up higher, a column of O's going down. And so what I felt off this column of O's going here, that if this market came back around to this point, this would be an area of minor support and a good place to fade the market. So I had a long entry here at 77.22. My stop loss was at 77.12, my profit target at 77.27. So what we saw here is that the markets came down and filled me, moved about 3 ticks against me, turned right around, moved right up 5 ticks to my profit target. When it did that, my trailing stop moved to break even just as a safety precaution, but was never triggered, and I was able to get out with 5 ticks here. So kind of pleased with what happened here in the afternoon. I had 3 attempts. I had 3 fills, 2 winning trades, and I closed the day up $100 per contract traded, and looking forward to seeing what kind of opportunities might present themselves tomorrow. Well, looking at tomorrow's economic calendar, you can see that we have a much busier day than we've seen all week. We begin at 7:30 with the release of the weekly unemployment claims. Then at 9 o'clock, we have the JOLTS job openings reports coming out. At 10 o'clock, we have crude oil inventory data being released. At 11:30, we have FOMC member Plosser speaking. At 11:45, we have Fed Chair Yellen speaking. At 12 o'clock, we have the release of the results of the 30-year bond auction. And then at 1 o'clock, we have the federal budget balance data coming out. So fair amount of activity to move the markets tomorrow, and hopefully that's going to give us some nice trading opportunities. And with that, I'd like to thank you all for watching today's daily video. I wish you a pleasant evening, and I look forward to speaking to you tomorrow. Take care and good night.